On this technical analysis video, we will be looking at silver on every single time frame, or a lot of them, from the longest term, which is what this one is. This is the yearly chart, to some very short-term charts. And each one will have 43 candles within it. I'll talk briefly how to read these candles, and there were many videos done this weekend. Go to the silverlog.blogspot.com. All the videos will be available there, and so many different charts. And the way a candle works, generally speaking, if you see a green and red look, the green increases, or it signifies an increase, where red signifies a decrease. On the green candle, the open for when the chart started is at the bottom. The closing value is at the top. The red is the same thing. It opened here and closes here. Now the lines that you see on the candle shows where it traded within the time frame. So each one of these represents a year. On this particular year, it managed to get over this 6.5 level, but it closed in here. For this candle here, it opened here, started off going this way, or most likely it started off, and then it rallied up towards here. That's what the lines on the chart mean. I'm not going to go over too much the terminology. I'm sure there's a fancy name for a candle like this, where it tested both sides and ultimately closed down below here. We'll look at the pattern recognition that each one has. So therefore, when we start off within this, it comes in with a downtrend, 4-candle downtrend, and when you notice that you have less candles, or at least a bigger rise like we have in here, mix this with a time consolidation. Markets correct either through price or through time. That's a correction through time, which thus signifies a massive gain. Now, it didn't hold it. When you have a massive gain, I've talked about Fibonacci levels. Well, the Fibonacci from here to here should mean, well, you'd like to find support here, but definitely around here. And it didn't find support there, thus signifying more moves coming towards a downside. 2 candles down, 2 consolidation, 3 down, more consolidation, a final wave lower, and then it created a multi-year, multi-candle time consolidation before it ultimately managed to create a bullish move, 3-candle consolidation, where it ranges through time, and we're entering a breakout candle right now. So this chart, when you look at a chart of this nature with so many years, you say to yourself, well, shouldn't inflation make a chart like this at least a break even be something of a line like this? And yeah, the answer is correct, it should. But obviously the price for 2 decades was manipulated towards the lower end, and I've talked a lot about that on other videos. Now what we're going to do is switch this up to the quarterly time frame, and basically what this means is we'll take a look at the last little bit of this point of view, and instead of this candle, there will be 4 candles that represent this one, 4 that would represent that one, and so on and so on. And this is the quarterly chart. And when we look at this, we bring in the time consolidation to start, a move higher, which thus translates to another time consolidation with a significant move higher. Within this move higher, there's some consolidation candles, along with another candle like this that jigsawed up and down. And then that followed this move with a price correction or panic selling. Markets can either correct through time or through price. And this is a spot where it corrected through price because it was a significant move. It was over 50%. It was on a exponential level. It was about a little under a 61.8% retracement, and that's just looking at this by eye, more along the lines of a little between 50 and 61. And this is logarithmic, so you see these candles dwarf in size compared to these candles. Now, normally on a linear chart, that's normal, but this isn't linear, this is logarithmic. Basically, what this is telling me is that this volatility was extremely light. There was not as many movements, a lot of indecision towards where the market was going, and they couldn't keep bringing the price of it lower, and they even suppressed it to stop it from going higher. For gold bottomed roughly around 2000 or 1999. Silver didn't bottom until this point here and didn't break out until 2004. That was price suppression within the silver market. Now, since this time frame, we have had 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row. 8 gains. The last 8 quarters have been profitable quarters. Now, amongst this, you have these candles that have all of these lines on it, showing within the time frame there has been a lot of price corrections within each candle. So even though it's been up for quite some time, it really isn't overextended. You can make a case that these 3 candles are that of a time consolidating period, which of course we'll see on future charts. Now the next one we will look at the monthly. Once again, each one of these contains 4 months within it. So this will have 4 candles, this will have 4 candles, and we'll now put the chart on the screen, and this is the monthly chart. So this shows that time correction, or that price correction, more on a grander scale. And as I was saying, on the move up, it had a lot of price corrections up and down. Even within here, you have a lot of these candles that have shown have big lines stating a lot of price movements along the way. And within this move, you have a nice move higher, you go lower. A wave higher, wave lower. Wave higher, wave lower. Wave higher, wave lower. And now we've had a substantial move higher. But by looking at this line, you can say, well, it's ready to top at any point. And it might be ready, but it doesn't want to as of yet. As far as technicals, you want to look at the shorter term time frames to see how things look. So we'll move this off to the weekly chart now and see within the weekly chart that this rally has had 2 weekly candles of gains, a very low volatile time consolidation, which has now been followed up with 4 candles showing gains. So a lot of bullish sentiment. This was the range I was talking about for quite some time, and the longer you're in a range, the bigger a breakout of the range is usually going to be. Now this is no longer a logarithmic chart, this is now linear, because logarithmic works good whether the price differential is between 1 and 500 or 499 and 500. It really doesn't matter much, but there really isn't much of a difference between linear and logarithmic when the price differentials are not so big. 15 to 23, that's not even a gain of 100%. So it's much easier because the numbers on the spreadsheet program I use base it by percent. They don't do even numbers like 18, then 20, then 23, 26, 30, and so on. Anyway, I'm just rambling on that. Let's now switch this off to the daily chart. We go from weekly to daily. And within the daily chart, this is the escalator-shaped pattern that we look to be in. And there has been not much for corrections along the way. And when we look at this for its corrections, this is what we see. Time, a time correction here, a time correction here, another time correction, which is really a 4-candle time correction, and what has a movement sort of like that, one price correction within it. There has been no substantial price corrections that have really retraced much. Basically, we need to break a significant trend line, and this is the trend line that we have, which has been staying intact for quite some time right now. The buyers are obviously in full control. In other videos, and I've talked about the break of this particular trend line, it has had 1, 2, 3, and 4 days above the trend line. Monday will be day 5 above it, and I want to count just to see how many days it can stay above it, and if it does it, then how large of a move is it going to have? Because right now this is pure bullish action with a lot of people and a lot of indecision within the range. And what I mean by indecision is they're indecisive on whether they want to skyrocket this to higher levels, or indecisive on having a correction more than anything. And whenever you stay in a range, it's you stay within the trend of the range until it gets broken, and that means that whenever it goes lower towards these trend lines, it means being bullish, and for the most part, whenever you're up towards the top part of this, you become bearish. And the next chart is the hourly time frame, and this is a SLV with some translations or some numbers translated into the COMEX pricing. And within this candle here, because it only shows from 9:30 to 4 o'clock, it did manage to get up to $23.50. And there's some pretty wild gap moves. This gap, a nice gap up on this date here. So you can get very often get some pretty wild moves towards the gap. And even here, this candle was the day before October the 1st. It gapped higher, and it ended, and it had a complete day within a time consolidation. And now we talk about up too much. Same thing on the daily chart. Notice that once it broke that trend line, that's when the big decline managed to come into play. I was stating this was a good time. This was a spot to go long. But at the same point, so was this here too. And that's why just because you reach an area where you find support doesn't mean you will. And that this is the area based on the Fibonacci that we had from the breakout low and the top in here. And the first level was a fail. The second level was an utter pass. And usually see utter fail, but whatever. And you break this trend line, you find the consolidation, it gets over this key resistance level, has a stage 2 uptrend, and then ended the day in a nice consolidation pattern. We're not done yet. We're going to go down the 15-minute time frame. And within the 15-minute time frame, we can see the rally a little bit better because it ends Thursday action with the descending triangle, a significant gap higher, which leads to higher gains, consolidates for a little while, has a substantial gain, and then this whole pattern is a time consolidation. The first part was trending lower, and the second part was trending higher. Final chart will be the 3-minute time frame, and there's not much to say about this. If you're a day trader, then this might work out for you. If you're trying to just understand how technical analysis works on multiple time frames, which if you're doing, I'll continue on with this. And a lot of times you like to see resistance become support, and obviously that never happened, but the range that this was in created a higher range on each level. So if we build little boxes on here, you can build a box here, you can build a box here, you can build a box here, and we can build a box here. Each range contained a higher high and a higher low to end the day. So therefore, when you start to see this pattern break, meaning a range like this, then you may want to change the way the trend is going. Look at all the multiple time frames, because by looking at every single time frame on here, there is not one single time frame stating, man, this market's dead. It's bearish. Every single one of these charts is bullish. The first chart, which was the yearly chart, it wasn't as bullish because we're not at all-time highs or anywhere near it. However, it did manage to break this resistance, thus making it bullish. We'll be very bullish once we can get anywhere above this level here. Thank you for watching. I hope you learned something. If you have any questions, please let me know. Take care. Bye-bye.